The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. More volatility in the cattle complex with a solid day to the upside on Monday in feeder cattle and live cattle futures. A good day in boxed beef as well. Meantime, in the grains and oilseeds, a fairly quiet start to the week as many folks in the trade are watching the Midwest Crop Tour, weather, and much more. We're going to talk about things. Joining us for analysis, John Heimberg with Total Farm Marketing. John, hope you had a nice weekend. Let's start on the livestock side. Let's do something a little different for our discussion here today. Cattle, interesting again, more volatility, a solid day to the upside. We, of course, had the screwworm announcements on Friday at that press conference with Secretary Rollins and Texas Governor Greg Abbott. There was a lot of chatter surrounding what that press conference would be and just adding to, I think, the volatility overall in the cattle complex, John.
Yeah, I really do. I think it's just one of those markets that's trying to get a grasp of this whole situation in terms of where's the cattle numbers going as we go forward. And you go look at the markets right now, where's the strength? It's in the deferred contracts. You know, we've really run these front contracts out, October 230, pushing, challenging those mid 230s again today. But then the deferred contracts showing the strength. Feeder cattle, $5 higher in the deferred contracts. There was one little subtle thing that came out of that press conference that we saw on Friday. The numbers and everything was kind of what we thought. They're going to put more money to this. They're going to add facilities. We're going to build this wall to try to control this pest as it works its way north. We'll see if it can get done in time. It almost feels inevitable that it's going to get here. I hope it does not. Okay. It sounds like a pretty horrific situation in the management side for producers if it were to. But then they had questioning afterwards for Secretary Rollins and Governor Abbott. And somebody asked Secretary Rollins very briefly, do you have a timeline on the border in terms of those Mexican feeder cattle? And basically, in a nutshell, she said, no, not until we get this thing under control. And since then, we've seen now a double-digit move in the deferred feeder cattle contracts, adding another $5 today. So we're starting to see this market say, all right, we knew it was going to be close to the end of the year. That's been priced in the front end. Now it may get closed beyond the end of the year. And now that's really kicking in those back deferred contracts. So that's where you see the strength in this cattle market. Over on the live side, just reviewing the weekend, pretty sloppy cash trade. I mean, you just really never didn't get a really good pattern. Some places were higher, some places were softer. I think it really just came down what was the demand or the availability in certain regions to build that price. One thing we cannot deny, though, is that retail demand has kicked back in. I'm not sure if it's the Labor Day side of it. Not sure if it's just the overall need for beef in the market system, but $4 or $3 plus higher on choice carcasses at 404 today. We're still a long way away from the COVID 475 highs, but we're back up over 400 per choice carcasses. And that's the first time we've done that since that window and put a new high in for the year.
Well, and we've talked about this so much. It's just really unprecedented territory, uncharted waters, whatever term you want to use here. It's an interesting situation to navigate for producers, for packers, of course, for consumers at retail with higher beef prices. I mean, there's just so many facets of this. And, when the good times stop for producers, we'll know when that happens. But up until then, you got to just manage your risk as best as possible. And I know even risk management for cattle right now is an interesting conversation.
It is. I mean, you got such a premium over the board. You got such volatility. The best play is continue to use options, move them up when there's opportunities to move them higher. It's real hard to put a risk position such as a sold call or a futures hedge in unless you really know you got the margins to meet, in that regard, because now live cattle today challenged those highs, didn't quite get through the most recent highs. Feeders now are in new highs today. We'll have to see. It felt like this market was getting very uneasy. Maybe we're building a sideways range here. Just talking to producers too, they were just not feeling comfortable about the signals the market was giving them. 2 weeks ago, it was like, oh, cash is going higher, we're rolling. Now it's kind of like, I'm not sure what to feel. So that's a classic sign of having some puts in play. Regardless what we do, even if we are in a sideways fashion here, maybe we're going to be October 240 to 220 with a $20 range, and working sideways for a while till we get just a clearer picture. It's still going to be volatile, and we're going to continue to see the big swings. We're $6 down days just because that's what the market wants to do that day is all just going to be part of the course. So it's going to be pretty interesting, I think, over these next few months where things are. I don't think anything's going to change on the supply side. It's going to stay tight. There's no real things on the window that can alter that. One big piece, I think, to this puzzle, excuse me, has been this Brazilian beef tariff.
Mm-hmm.
And now we got Brazilian beef at 76% plus with the new 50% tariff President Trump put on. That's going to impact the ground beef market. We've already seen some companies such as McDonald's, Chipotle, Steak and Shake, companies like that start making comments about the price of ground beef. You're starting to see some stores feature other items to fill that ground beef gap because I noticed the other day my ground beef at our grocery hit $8.50 a pound. That's pretty elevated pretty quickly. Normally it was hanging around that $5.99 area, and all of a sudden, boom, here comes $3 to it. The store I was at last night, the next cooler over was featuring ground turkey, the cheaper alternative. So those things are coming into play too. What's the consumer do with those types of prices? Because ground beef has really been the savior for the consumer, at least keeping beef in the menu, not buying the high price cuts.
And prime example from my side, over the weekend, I made some chili for a fantasy football draft party, and I ended up getting 75-25 ground beef for a pound and a half. It was about $6.50. I said, well, I'm going to go the cheaper route because it's going in chili and it's all going to taste good anyway. But,
right.
A lot of folks are making that decision, or they're trading over to other meats. Case in point, pork. Pork's a cheaper alternative. You look at this hog market right now, maybe getting some spillover support in futures from the cattle. We're going to have a hogs and pigs report coming up here soon, things like that. So, your take on how this has affected, say, the hog complex here, John.
And that's going to be something we need. We've seen decent retail demand. Pork carcasses are good value right now. Again, holding that market up. On top of that, the cash market's holding pretty good value here. We got August off the books here last week. I think that was a big key. Now what's going to happen? Do we get October to rally to that gap from August? We were trading $20 under August at expiration there. So we're starting to see some movement now, at least in that October and that December contract, maybe starting to lift up, fill that gap. But, cash index still holding 109. As fall hogs are coming at us, now we typically expect to see that come down a little here. But, given where beef is and the situation, that might be an area that the Packers keep a little more pro money into it so they can possibly make a little bit more return. So we'll have to see. But the hog market looks good. Nice turn on Friday. Good solid hold today. Didn't really get anywhere too fast, 40 to 50, 60 cents higher. But there's some prospects, I think, of this hog market could make a nice little leg out here, especially since the way we reversed off of things yesterday, or on Friday, excuse me.
Let's talk over in the grains. Let's start with corn and I think soybeans too. We can just talk about the Midwest Crop Tour, getting that underway this week. And I know a lot of people in the trade put a focus on the pictures on social media they're getting from the tour and some of the recaps and much more. It's your thoughts on this, some of the early stuff already showing some pretty big potential, it sounds like, in South Dakota, John.
Yeah, it sounds like Western Corn Belt is everything that everybody's been kind of saying it would be. Some really decent numbers coming out of those South Dakota stops. Now, again, that's just their stops. But when things are trending 30, 40% above last year, 20 to 30 bushels the acre, maybe more than last year, that makes you just kind of wonder what's out there in that region. Again, crop ratings were good for a reason. And then that area has been an area that's just been blessed with moisture as well as moderate temperatures now. So we're still going to watch how that crop finishes out. The problem there might be, does it get finished? That'll be something to be a key here, especially with this colder snap of temperatures coming. Does it shift us to a more fall type pattern. Eastern Corn Belt is reflecting what we thought we would see, which is some issues because of the warm temperatures, the drier forecasts that they've been dealing with the last handful of weeks. Still a decent crop of corn so far, at least from my initial impressions of it. We'll see what the numbers come in today on that. So it's going to be an east versus west situation, and as they work towards the middle, we'll see how it balances out. But there's a lot of good corn out in the Western Corn Belt this year in terms of what they've seen. And just some of the pictures of the ears they're massive. They got, width and girth, and it's impressive corn crop out in that Western Corn Belt. So we'll have to see how that plays out. Corn market, very, very quiet today. Got a little more export demand. Export inspections are a little soft, especially with the market year coming to an end. To the point, USDA just made a bump up on that last report regarding old crop export demand. I'm going to start to question whether that needs to come back down in that regard with the shipments that we're seeing here, with the amount of corn that we need to ship between now and the end of the marketing year. I would expect export sales this week to be pretty disappointing again, with a lot of cancellations, maybe with a lot of those bushels maybe getting rolled into 25, 26, or if everybody's comfortable with just closing the books on those sales. That's going to be a key little piece here that could add 100,000 or 100 million bushels to the pile real quickly if all of a sudden the end of the year export drops off.
John Heimberg with Total Farm Marketing is our guest analyst here today. One other thought in this corn market, too, that really surprised me last week, and I was thankful to see it, I think, in many ways, is that after all the volatility with the USDA reports, we essentially closed unchanged on the week in corn. And here we are on Monday, up slightly. That just screams to me, and I'm no market expert, but it screams to me that we really priced in this big yield potential, and maybe this is a spot for us, if anything, to grind here at this $4 level in D's corn, John.
That's a distinct possibility. And I'm getting to the stage with things. The USDA report comes, it goes, it's numbers, okay? But let's look at the corn flow, and that's my biggest concern right now. I'm still somewhat bearish corn. I want to see some price movement, but I think price movement is still going to be meant to be opportunities to get some sales in, or cover sales, or build some defense into the spring. We're going to be trying to put together, between the Brazil crop, which just got raised to 137 million metric tons by CONAB, 5 million tons over what the USDA is forecasting. I'm hearing numbers that could be up over 140 out of Brazil. So they're looking at 6 billion bushels of corn. Here, with the numbers that we have, we're looking at 17 billion bushels of corn, throwing 1.3 billion of old crop. This world's got to be digesting 22, 23, 24 million metric tons of corn here in the next, billion bushels of corn here in the next handful of months. That's just a big pile. And that's going to keep a lid on this market. Maybe we get some, short cover and rally pop here in the early, like we saw last year. We put a low in, we rallied beautifully till the 1st of October. And then the pile of corn that was coming at us started the way on market prices. And we set our kind of post-harvest low. A little fearful that post-harvest low, if we see the demand dry up, could very well take out this type of low here. So I'm very cautious of the corn market. You got a big carry in the corn market. Those are things that all provide challenges to the marketer in this regard. How do you handle it? There's a lot of things that just need to come into play. Especially if you got bushels, you got to move this fall. Make sure you have a plan. Get some type of control on them. If you're selling them, we got to keep some ownership into them. In that regard, if you're going to hold through harvest and hope the price is there, puts are cheap. Just make sure you keep at least a $4 floor underneath of it, just in case. So there's a lot of questions that need to be asked out there, and just make sure you're asking those questions and going from there with it.
A rally in soybeans over the last week, I would say, has maybe given some producers a little bit of an opportunity to take advantage of here. I mean, you put 50-some cents on beans. You obviously got to take a look at that, right, John?
I think you do. First off, the bean market is just the exact opposite of the corn market. We got some fairly friendly numbers, but again, the USDA numbers are here and they're gone. Now it's a demand bear market in my mind. China has not stepped into this market to buy beans. And until it does, this market will not get over itself too far, right? In that regard. 1050 November is going to be a pretty key spot. We can break through there. There's some upside there, but I just don't know if we can, because we want to keep prices down so we get that Chinese demand to show up. And right now, last year, they picked up 822 million bushels from us. They basically got their September and most of their October, or half their October needs covered, which we usually cover by Brazil. So if even we sell 1/4 less soybeans to China using last year's numbers, that's 200 million bushels plus on the balance sheet. All of a sudden, that 290, which everybody thinks looks a little friendly with the tight acres and everything, gets real heavy at 490. So that's why this market's going to be a little bit cautious in that regard, just because of the pure fact that we need that Chinese business. I think they're still going to show up, but they're sure trying to do anything they can to avoid buying U.S. beans. Saw today they picked up some canola out of Australia for the first time in 5 years. That again tells me here's another protein source that's somewhat substitutable for beans, and they're buying it from Australia. And so locking in those U.S. beans at relatively cheap price levels when you look at U.S. beans versus the rest of the world.
John, good thoughts as always as we close it out here today. Anything final you'd share or reiterate with folks?
Yeah, I hate to say it. I think the markets are going to get pretty boring here for a while, but obviously make sure if there's value, take care of it. Start thinking ahead a little bit in your marketing strategies here. Big carry markets worry me as well. We've seen that before where 1 month walks off the board, the next month bleeds down that carry. Think about those things in terms of your marketing plan, and whether it's storage, basis contracts, hedge to arrives. There's a lot of different tools out there, so just ask the questions. And, maybe we can help you out a little bit.
Folks want to reach out. I know a lot of resources there at Total Farm Marketing. How can they get in touch with you, John?
Give us a call, 800-334-9779. Shoot us an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
Always good to talk with you. John Heinberg, Total Farm Marketing. Have a great week. Thanks for joining us again on Market Talk.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.